4, 3, 2.
Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live as we do each quarter for quadruple witching options expiration from the Nasdaq Felix options trading floor. Joining me throughout the morning is my co-host, Sean Cruz. He's the Manager of Trading Strategies over at TD Ameritrade. And we're going to wrap up the morning coverage with clues from the options market. Sean, thank you so much for spending the day with me on the Felix. Let's talk about that and looking at options flows. What has options activity suggested in terms of what sectors and stocks are hot right now?
So right now we're seeing a lot of activity in the crude oil market that makes sense with crude pulling back over 3% today and the upcoming OPEC meeting. It makes sense to see a lot of activity in there. Also this week, which was a little bit more surprising, we saw a lot of activity in the media sector around a lot of the M&A activity and the deals that were going on in there. You typically expect to see a little bit of a slowdown going into summer, but I think we've got plenty of headline news, some of it related to M&A, some a little bit more on the geopolitical front to really drive volumes going into the summer. So we may not get the summer slowdown we're used to.
Particularly with the M&A activity opening up now too, not just within the media sector, but we're seeing it in healthcare as well. But let's look at it from a broader perspective. Options on indexes, what is that activity suggesting about how the overall broader market might trade through the summer?
So I like to look and see where you see a lot of open interest building up, because when you start to get volumes thinning out a little bit going into the summer, sometimes where there's a lot of open interest sitting at certain strike prices, that becomes an area where you start to see markets either catch a bid or maybe bounce off a little bit and sell off when they get to those levels as a lot of those options become exercised. So I think that it's interesting to watch in the S&P 500. We're seeing a lot of activity at the 2,800 level. That's becoming
that's been a level in play.
It is. Yeah. It's a level that they've bounced off of a few times. And then on the downside, seeing a lot of activity around the 2,750 level.
So it sounds really range bound like it was last summer.
And I think we've seen this go on quite a bit where we establish a range and then headlines drive us back and forth in there. TD Ameritrade clients have been using that as an opportunity to go in, buy when they're down. When they hit to the top of that range, they start to rotate out and find other places to put their money to work.
Let's talk about that. Why should the retail trader really focus on what's happening in the options market? If you tend to trade equities or if you tend to be in the bond space, I feel like all different types of investors, regardless of asset class, should be looking at the options and futures markets.
They definitely should. I think for the options market, it's important, even if you're not trading options, let's say I'm holding a name that has options listed, I can become aware of any sort of potential one-off event risk by looking at the options. The implied volatilities will spike in areas where there is some sort of event. It could be earnings, it could be a product announcement, it could be anything. But when you start to look at options, it gives you an idea of just how much uncertainty or how much risk there is in a name that you're holding. And those are a lot more forward-looking. So I think a lot of people look at performance, and that's a little bit more historical. Implied volatilities are very forward-looking into what's expected to happen. So, and that plays out in almost every single individual holding as long as they have options listed. It's a useful exercise to track.
This might be more of the TD Ameritrade Education Center question, but if you are a retail trader and all you've been focusing on is equities, should you be afraid to get into the options market? What tools are available to help guide you with that transition?
We have plenty of education that we offer for free at TD Ameritrade, and it is useful. You can not only learn how to just use options to be aware of anything that's upcoming in a name that you might be holding, but maybe you start to use it to hedge, use it to maybe sell some calls against right calls and get a little bit more income, a little more yield out of something you're holding. I think there's a lot of uses for options, and they're not necessarily have to be a speculative vehicle. They can be something used to actually manage risk in your portfolio. They do come with their own certain risk, and we make to make sure we educate our clients on all the risks, but also all the opportunities they can get from options.
All right. Well, thank you very much for joining me throughout the day, Sean. And thank you for joining me for the first half of the session. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.